Okay, so yeah, just doing something a little bit different this week and that, so might sort of come out a little bit different on the review, but basically yeah, on the road. So anyway, we'll see how this one sort of pans out. But look, we'll start off with sort of Aussie, just having a look over this. I mean, as you can see, it sort of really came up and it sort of tested that sort of confirmed breakout line that we sort of put in. When was that sort of back? Sort of, I think Thursday, Friday sort of sessions and that. So, I mean, regardless of sort of everything that's been trying to sort of push it down, it's been very sort of resilient and is really still pushing up against this higher time frame sort of breakout. So if we flip probably onto this other chart here, might have a bit of a better view of it. Um, so it's a little bit tougher on the laptop at the moment, so I don't have the normal sort of screens to be able to sort of see the price action. But you can see the sort of general course of action here. Obviously, sort of earlier we thought we'd be sort of dropping down, back down to that sort of low 65s for the retest a little bit quicker. And obviously, like it attempted a couple of sort of pushes out towards that sort of, the faithful to the 90s area. This is what I always say with the Aussie. Whether it's a support or a resistance, every cent that you seem to be going through, 90s just seems to be reoccurring as quite a sort of strong pivot point, basically. So once we do get to the top side of this, there's a good chance that we'll sort of see it hold fairly well, despite the fact that we know that this is actually so obviously quite a sort of heavy sort of resistance zone. But we can see this is one, two, and obviously just coming into the end of Friday's session, a third attempt up through those sort of 65, 90 zones. This little sell down here, I think, is mainly just a correction. I've got a couple of different sort of prices on a couple of different feeds, so certainly sort of closing towards the high. So if we flip onto the daily, again, so we're seeing that it had this nice little consolidation patch after this first breakout, pushing through basically up into those 65 zones. And look, it's stopping as expected. Pretty much, this lower area here, we've got it sort of through. We've seen it being support a number of times over the last couple of months. Obviously, well, yeah, the technology is not really matching so much here. But yeah, as you can see, it's been support. We know that the sellers are going to be coming back in here and well, they've knocked it down. But the fact that even if you sort of zoom into this a little bit more, you're seeing that it had this little consolidation zone. Friday was a little bit of a tricky one because, US had the Thanksgiving sort of period there. So that's obviously sort of going to sort of change the volumes in the market a little bit. So we didn't see any sort of major explosions. But if you look at this on a pure sort of just technical basis here, you've got that consolidation, which is clearly broken out to the top side, and it's closed pretty much right up on into the highs of this area. So despite sort of it being those sort of low volumes, it does look like it's gearing up to push through this next level. And definitely, I think it's sort of a test into 66, 30, 40, I think could be on the cards for early this week. There was a little bit of news I saw that, I mean, the market as a whole seems to have sort of moved on from the whole sort of Middle East situation. Obviously that was the big driver with gold. It's what kept USD or DXY sort of elevated for those last couple of weeks up the top side there. And, among other sort of factors, the fact that they sort of dropped away now is obviously you're seeing sort of those safe haven ideas and that sort of drop away as well. But we saw a couple of hostages sort of released over the weekend as well. Because I think it was apparently supposed to be coming last Friday. But of course, then there was a bit of a delay or something along these lines. I haven't been watching it super closely, but any sort of little sort of progression, de-escalation of this whole sort of situation is going to be seen as another catalyst and another justification for risk to push a little bit higher. And this is why sort of, Aussie's really I mean, Aussie's just been beaten down. The last quarter, we've got the technical break, which we've been trading since 63 cents long. And it still just keeps grinding higher and higher. So, I mean, you can see on this basis here, we're just pushing into the overbought area, but certainly it's not even sort of flat lining out. We've seen that generally around this area. I mean, if we sort of got down, and this is on the daily, the RSI, and dragged it across the top end here, certainly you can get a little bit more overbought typically than it currently is, which leads me to sort of think that we do have a little bit more sort of upside in this move. A general idea I think here would be to sort of test to sort of see around this sort of wick area, going back from sort of early August. Because I would say this is certainly, if you're long, I mean, sorry, if you're short for any of this period, you would either be stopped out or just ridiculous. You've just given back all your gains. But certainly, people would still be trying to short this thing as it moves back up. And the obvious point for people to put their stops would be just above these wicks over here, and the market knows it. So I think certainly if we get a little bit of a push through there, I'd see this sort of push around 66, 66.50, probably sort of coming through this week. Obviously, just got to sort of see what happens once the US sort of volume sort of starts to come back online. But yeah, I'm looking for a little bit more upside with the Aussie there. I'll flip on to gold quickly because gold had quite a sort of strong close to the week as well. It's really obviously been pushing up against this sort of 65, I'm still stuck on the Aussie here, up above this sort of 2000 area. And you can see that it's really sort of, like, again, it had a nice sort of strong swing up and closed right up near the highs here. So if we put this down possibly onto, say, a bit of a 4 hour, this is what we're sort of looking that maybe we'd be seeing a little bit of this triangle sort of action happening. And again, obviously it didn't quite play out to this, sort of knocked down a little bit further, but it's certainly playing its part coming through here. So we saw those sort of like two attempts, like price target taken out. We had the nice swing back into that area. And you can see here that obviously it just wasn't enough to sort of close up, sort of get above that 2000 area. And, they had a quick flush out. In the scheme of things, still fairly minor, back down to 1987. But certainly towards the last sort of later part of the week there, it has just been continually grinding up. The RSI is definitely in a position to support a bit of a move higher. And of course, we know that we're coming into the end of the month. Gold's never been able to close a monthly candle out above, I think it's technically 1991 or 92, I think it was. So I'll chuck onto the monthly here. Yeah, as you can see, sort of up around, I think maybe I had it on this other chart, marked out a little bit better. Yeah, here's your monthly, and you can see that sort of, certainly around 2000 hasn't sort of made it through, but we've flipped this monthly candle. We're coming in, we've got 4 days left. The RSI sort of obviously it's dipped back down below 80, so it's out of that sort of overbought area, and it looks almost to be turning up again. This is on a monthly candle. So certainly if we finish this month out strong, and my first sort of thought with this is it has to at least test last month's wick highs, which is the 2010 area. So it's only an $8 range to that zone. So I think sort of certainly if we can get above that, and if we can close the month, I mean technically close on the month above sort of 92, would sort of see it perk up a little bit more. But above that sort of psychological level of 2000, I think is really going to sort of get a lot of people talking about it. And again, if we see this continual sell-off, and this is what I've been saying with gold, you've got the Middle East situation to get it started, but then, on top of that, you've got the US dollar start to unwind. You've got 3 months of gains that have come up in that. That money's got to go somewhere. And, like gold can really sort of, as I said, I call it sort of risk fluid because it can be risk on, it can be risk off. But certainly sort of as you see the US dollar unwind, that money's got to go somewhere, and gold's looking like a very attractive sort of sector of the market for it to be sort of piling into. So, I mean, that's my sort of feeling with gold, that we've still got a little bit more upside. I'll jump onto DXY in a moment, which sort of shows a supported move of that because we're coming back down for the test for another leg lower. And these things, as I said, this is the cross-chart confluence that I talk about, that it's not just going to be seeing it happening with one chart. You're going to see all these things come into their major zones on a number of different charts, seemingly at the same time. And this is what's going to give you the idea of the actual sentiment across a broad scope of the market. It's not just gold doing this. It's not just US dollar doing this. This is sort of like the whole market, their mentality, their sentiment shifting together. So certainly if we jump back down onto a lower one, so we've got the daily here. Daily's got room to move. It's certainly looking like a nice little swing down here. You got to kind of sort of think what's going to happen in regards to just sort of US markets. It's late on a Sunday here. US markets sort of coming back online with proper volume whether people are looking to sort of just sell into whatever strength was gained over the Friday session, or if they're just going to go, okay, well, here we go, we've actually got the next leg happening. It certainly looks like it's, as I said, worth a test up to that 2010 zone. A break above that, we do have a couple of other areas that we've obviously highlighted here. So 2020 is an obvious spot for a little bit of a sort of take profit on the break of that 2010, which is a $10 move. I mean, it's not massive, but it's certainly once it gets up there, we'll wait for that sort of like first initial break, wait for the pullback, mark out the top of that breakout candle, and that's going to be the big confirmation. So if we break through, because every time it breaks through, it could just be hitting stops and then it could just sort of shoot back down. Like, it's sort of like they want to sell things down, but, they may as well take out all the shorts with the textbook stops first, because that's the easy money. So if we can sort of close up around that area, obviously higher time frame the better, to at least a 4 hour or a daily. But if we can sort of close up around there, go to the 2020, get the back test of 2010, 2008, this kind of zone, and then the subsequent move above whatever that breakout candle is, to say 220 in this example, that'll be the confirmation of the move to go higher, and then we're looking at the higher ranges, and that's where we're going to get a bit more of the sort of larger moves with gold, in my opinion. I think we're then sort of looking at the sort of 2035, 2050, and then, who knows above that, if the month closes strongly, I expect an early push coming into December, and then possibly, a little bit of back and forth as it sort of creates that sort of lower wick for the monthly. But certainly, I think that if we can close the month above 2000, that's going to get a lot of people talking. Okay, just flip across to DXY quickly, and we're seeing it sort of come back down, and this is what we've been saying. I mean, you can see we've mapped it out every sort of session basically, but the weekly reviews are always good because it gives us a chance to really sort of have a look at sort of where it'll be going over the week. Obviously, there's a lot of noise sort of going intraday, sort of up and down, but we said we were going to come down here. If you look at last week's weekly review, this was an expected area. We know this because they're like, as I said, if you drag this back, we've seen the buyers and the sellers sort of value the market around here. And, the thing is that there are people that are still sort of dollar bulls. They've still got a lot of sort of positive data coming out. It's just that, in terms of sort of where the Fed are and their sort of position on things at the moment, they're certainly coming to the point of, okay, even though the economy is like producing quite good numbers, you want high interest rates, and if they're sort of going to be pausing these things, that's the first step towards, potentially, it's not going to be coming next week. It's probably at best maybe late 2024, but it's the first step towards cuts, of course. So, the market is kind of moving away from the USO. Like, it doesn't have the safe haven need of it because of the Middle East situation. You've got the CPI coming down, beating expectations, looking like it's going to put in a 2 handle on the next print, most likely if it continues this way. And the market's just going, okay, well, where can I get a better return for my money? And that's why you're seeing gold start to appreciate more, and that's why you're seeing all the US dollars crosses. And obviously the main one that I trade there is the Aussie. You're seeing these things sort of recalibrate a little bit higher as the sort of like 3 months of the US dollar starts to sort of unwind. But the sort of here and now is that, as you can see, this is the path that we sort of thought. We knew the buyers would be coming in here. They pushed up. There wasn't a real sort of idea to sort of say, this is the point here, that's the point there where this push could have gone to. We did see it try to push back down early week, but till you take out these sort of larger sort of time frame highs, plus also mainly this sort of large falling resistance, you're just going to continue to see this push down. And this is exactly what we've got. We came up, pushed here. It was a little bit of a flare up through Thursday's session, but obviously sort of that got hammered down coming into sort of Friday's close. Again, they had Thanksgiving, so make of that as you will. But certainly at the moment, we're coming back into what is the first of the sort of 3 scenarios here, which is basically, it could either be like if it holds this zone and they find buys. Look, I don't think it will. I think, as I said, it will go down, and the next price target is sub 103 for me. But as it is right now, just looking on this on the weekend, you're potentially coming into either a double bottom situation here, what I think will happen, which is I think it'll sort of push through and make a new low down to this next price target. Or basically, if you get the double bottom, you could then be looking for a little bit of a range sort of play. As I said, I'm leaning towards a little bit more sort of US dollar weakness in the short term. You'd want to see at least come up and test the top side of this falling resistance, which, we've obviously sort of seen this sort of started from November. So it was a month-long sort of trend that it's sort of been sort of playing into here, and it can't even get the buying power to come up and test the top side of it. I mean, it's just getting weaker and weaker, obviously, as the further it goes. So, at the moment, again, we'll sort of see how things go sort of when the US markets come back online. But it's coming down to sort of retest that bottom for the next leg down. If we sort of can push through to this, we've actually got the next big, like this sort of first price target here is actually just sort of sub 103, which is the sort of measured move from the bear flag that sort of played out from, so forgive me, which one was this? That was the CPI. Yeah, that was the CPI move, I think, which obviously sort of gives us our price target down here. But my main second price target is the 61% of that big, massive move up, which we can see. If I sort of jump onto the daily, might be able to sort of see it a little bit clearer. We can see there was a tiny little bit of a sort of daily range through this area here as well. If we drag this one, we can say that the next sort of area, there was a little bit of a range coming down here, but this is the 61%. It's also coming in line with the top side of that falling resistance that we sort of broke through at the end of August. So, I mean, it's really just, it's come down very quickly. But at the moment, it doesn't look like there's too much to sort of stand in its way. You've got 3 months of gains there. So I think the market's certainly looking like it sort of wants to move some capital around and sort of find other areas where they can get a better return. So I'm still looking for some more sort of downside with US dollar to come. And that goes in line with Aussie attempting to push out the top. And this is the thing that I say, this is the cross-chart confluence that potentially you're getting Aussie coming into its breakout zone, you're getting DXY coming into a support area here. If this pops through here, there's a good chance that you get a pop through, and then, it's a little bit of a rally back up. This will get Aussie through 66. Whoops. This will get Aussie through 66, and then could obviously see it have a little bit of a rejection and a back test, which is pretty much what we were sort of predicting, so what we're looking for with the Aussie in the short term. And anyway, we'll flip across to copper quickly here. Copper, it's just seems to be finding itself a nice little range in this top end here. So I want to see this actually on a weekly, because this was the area that we really sort of picked out. I told you that 380 zone was what I've been looking for to get above, and it's just crunched through that and closed up above these wicks from the sort of previous, when's this back, sort of mid-early September. So RSI's got a lot of space to run to sort of support a continued move higher. We're still getting some nice sort of bullish sort of candles on the weekly here. Basically, this just for me is just stopped because this is it's a body fill of these of this resistance zone of the weekly candles, which obviously they've sort of agreed with and sort of sold it down from that point. But bar a little bit of a short-term downside to give a bit of a bottom wick for the new weekly candle, I think this could really sort of move back up. The main area that I think I'd be looking for right now, where I think we might see it sort of actually run into a little bit of a sort of a bit of a hit, is what we got here. So 393, the body fill. So basically the same move that we've got going on down here, where it's just come up, filled this body. I'd be looking for it over here, because this was a little bit of a flare up and then obviously shot back down. So this is only a 2-week period, an open and a close. But realistically, you've got a lot of exchange up around this area. And if I get these ones out of the way, so if you look back over here, we can see that this is actually, if we drag this all the way through, this has been a bit of quite a strong sort of point on both sides, because we can see that it's been, it's support here, it's then obviously broken through, come for the back test, resistance, just couldn't get back up over this zone. This is looking like a very much a magnet of an area that I would expect it to sort of really sort of at least come up and test and try. Whether it sort of can break through this, well, you know, you got to look at the other factors that are coming in. But we're through the sort of large, this is basically a yearly long falling resistance here. And we're seeing that it's quite a clear breakout. So on the weekly, of course, you know, higher time frames, you know, they're going to be a lot stronger. Excuse me. And we've also got the RSI sort of supporting the move. I would say certainly a move up to sort of 393, 394. This is the area that I'd be sort of targeting, probably over the next, you know, towards now and the end of the year. So I'll be marking this one out because I think this is very much a likely area that copper could be sort of shooting forward. And this is the thing as well, as I said, again, with the sort of cross-chart confluence, you've got a move up in copper will be supporting a move up in Aussie. You've got the Yuan is going to continue to strengthen, which is going to be pushing US dollar down. Once you've got that segment of the market selling US dollars, they're not just going to be selling it against the Yuan or buying it against the Aussie. Sorry, selling against the Aussie. You know, you're going to see it as a broad thing, and you're going to see DXY continue to move down. And this is another reason I think we've still got a little bit more of a run in this direction with risk. Copper moving up, Aussie moving up, gold moving up, US dollar moving down, Yuan strengthening. So I would certainly say, I would say probably by now and the end of the year, this will be the next price target, which I'll mark out now as well. Cool. All right, and finally, just sort of flip across to the Yuan, because this has really sort of come down hard. So this was the head and shoulders that I've been sort of touting for a while of a potential play out, and it's just come down very quickly along here. And you can see though, this sort of shows that as it sort of like used it as a support, this again, it's on the weekly candle, so this is, you know, a month's worth of price action just down in this zone before it sort of decided to sort of continue on its leg. So again, this could mean that we sort of, I think it'll be quite tough to get through this area. Hence why I've got it there as the second price target. We know that the buyers have valued it quite strongly previously. And if we sort of actually drag this across here, so where we go, we didn't actually get a weekly close super strong underneath where those other previous bodies had been. So we're getting a bit of a replication of this price action from back in July, where obviously the buyers are valuing it here and they're sort of trying to push it up. You got to sort of think with these things, even if it is going to go down lower. I mean, you know, there's so many people, so many participants in the market. You know, it spent a month in this one, no, sorry, 1 month, sorry. It spent 3 months in a 1% range, which is incredibly tight. It's now come down 3% in the last, you know, 20, 25 days or so. That's a very fast move down. Like, you know, as I said, a couple of weeks ago, you were paying 7.29. Now you can buy it for 7.14. You know, if people believe that US dollars still got some strength in it, and as I said, it's got the data to back it. So there's nothing wrong necessarily with their economy as it's sort of coming out with their data at the moment. There's going to be people that want to give these things another shot. And, you know, now that it's 3% cheaper than it was just 2 weeks ago, why wouldn't they? And this is what's going to hold it up and keep it elevated for a little while. And you've got to see sort of like, you know, you drill down onto the lower time frames. You pick out your highs on these levels. So this thing keeps trying to disconnect me. You see it sort of try to sort of like make the highs, and you look for those lower time frame breakouts. But if it can't muster up that, then we're just going to see a continuation of this move. And I think sort of, yeah, you know, below, I mean, we're only at the 38 at the moment. I think certainly if we go for a bit of a wick fill around the 50%, that would probably be a next sort of a short-term price target, which is again, you know, if we drag this down, it's 1.3% off. So, you know, certainly these weekly candles are looking, they're not sort of tightening up. What you want to see when you see these things potentially turning around are these sort of like tighter, shorter sort of candles. As you see here, this is a very tight range coming through here. The bodies are very small. You've got the wicks both sides of it. It's very much indecision. These large full candles, I mean, look at these ones here. They're large full candles. Yes, we've got a bit of a top wick here, but we filled this and we kept on going. These ones just continue the trend. And you look previously, you had these large ones coming down here. It didn't sort of fly back up on the next candle. It ranged a little bit and then it started to move up. So I think certainly the fact that these are some long sort of full-bodied candles coming to the downside, I think the market's still quite keen to sort of sell it at these levels. So I'll chuck an alarm on this one here because if we get underneath this, I would say we're going for that wick fill down at, what price are we there? Wick fill is at 705. This is weekly supports.